I'm ready.
Okay. Hey, everybody. This is Scott Yance, Greater Texas Mortgage, and I am joined here today by Millie Nguyen, who's not only a good friend, she's also a top realtor of mine, and she is working on setting up several first-time homebuyer courses for people that are wanting to come in and learn more about the buying process. So, welcome, Millie. Let's talk about that today and see what we can do. It's going to be a short little presentation to kind of talk about your class. So give us a high-level overview about what you're looking at.
So basically, we are start doing a series of webinars, First Time Buyers. We're gonna be talking maybe probably every 15 days about how to qualify. You know. We don't going to talk about specific. We're just going to provide generic information. Um, um, how to improve your credit, what is the documentation that the any lender will require, what about if you're self-employed, and what not to do while you are in a transaction. The five mistakes of clients or buyers during while being in a real estate transaction, what not to do, for example, buy a new car.
Right. That's always a big one, right? We always
Exactly.
we
That's
always make that
always the big
joke.
one.
Yeah, and it always seems to be a Tahoe. I don't know why in the past it's not a Mercedes, it's not a BMW. It's
It is.
somebody
I
that went out
never.
and fell in
All
love
right.
with a Tahoe. So
Really?
yeah, well, Tahoe or Suburban. In my case, which it really doesn't happen anymore. It used to happen a lot more, but it was always a Tahoe. And they just had to have it, and they lost their house. But
Yeah.
it
No.
happens,
Like,
right?
and not even that. Like, for example, mainly, and I think we have seen this case in the past. Like, um, a couple days prior closing, um, clients are start using the credit cards for
Mm-hmm.
example, buy a refrigerator, washer, the appliances when
Mm-hmm.
it's a pre-owned property. So that transaction has to be literally the day after or the day of closing day.
Exactly.
So
Exactly.
it's stuff like that that can upset or damage the transaction. Anything with credit, positive or negative. I think we do have a case as well that we have a client that she was trying to improve her credit score by paying, like, I think it was like $500 collection account that she had in the past more than 5 years, and that mess up the whole transaction as well. So we were going to be talking mainly of those five mistakes.
Right. Just kind of highlight on that. I don't think a lot of people understand that you may have a collection that was sitting there for 3 years.
Exactly.
And as soon as you go in and pay it off, it updates like it just happened yesterday.
And that's
So
exactly what happened on that case years
yeah,
ago. Yeah.
and it's not always a good idea to do that. That's why you really need to have that working conversation with not only your realtor but also your mortgage person, so that they go into detail as to what to do, what not to do, because what you think might be right or what the internet said may not necessarily be the right
It's
thing to
not
do.
necessarily your
Yeah.
case. Yes.
So if we talked about that, so give me just, I know you've got a lot of examples that you're going to cover in the class, but what's
Well,
one other thing that you see?
like, one of the questions that we always get, you and I, is like how to improve our FICO score.
Mhm.
Or like or for example, if we can, well, our thoughts about refer a client for credit improvement, like
Mhm.
credit repair companies.
Mhm.
I always think that a good loan officer, they have experience, will be able to direct, depends of the case, of course,
Right.
and give you guidance on how to improve your FICO score without to pay thousands to a credit report repair company.
Right. And just to talk about that, because I do deal with a reputable credit restoration. I don't like to use the word credit repair. Credit
Okay.
repair kind of goes back to the 80s, right? Of
Okay.
80s and 90s of, hey, I'm going to send in a letter challenge that this is never my debt. And what would happen is the credit companies would take it off, and then all of a sudden it come back on, and it's not really a true credit repair. It's how to restore your credit. So if you were 30 days late on your car note, it's going to stay on your credit report. Okay. If you had a collection and they're not going to remove it or challenge it or something like that, it's going to stay there. So there's got to be steps that you can do to restore that, right? By, opening up debt and showing that you can pay it, or maybe you have to pay down on some debts. Maybe you need to reestablish some stuff. And I think in situations like that, dealing with a reputable company might be the route to go. If the credit is so messed up, or it's in such a situation where you just can't do it on your own, then a lot of times you got to get the right people to help with it, right?
Exactly.
And it may cost money, but it's going to save you money down the road.
But I think, again, this is made that that's what, I don't think I don't see you always sending a lot of people to this company. You always have that's the beauty of like preparing in advance, like 3 months, 6 months in advance, and figuring out what's going on with your credit. And I always think, with your advice to the clients, before we even enter a transaction, how to improve it. I can, like giving tips here and there and say, hey, I need you to make these payments, or pay attention to these accounts, and that way we can improve their FICO.
Right.
Or in the case, going back to the case that we have a couple of years ago of a lady that she was trying to improve her credit. We have so many, all the cases are different. So basically, sit down with you at front before we even start looking for a house is the best way to offset or mitigate any surprises during a real estate transaction.
Yeah, and that's the thing. I mean, and a lot of times it's just something simple. I run across people that they make $20,000-$30,000 a month, but they don't have a very good credit score because they've paid everything off and they're not really paying on anything. And it could be as simple as putting your Netflix on a credit card every month and just have it automatically paid, right, to improve your credit score. But the other thing I think people don't understand is they go, well, I only got $500 in credit card debt on 3 different credit cards. Yeah, but your limit is $500. So the way that they're looking at it is you're maxed out. So it could be as simple as, paying down those credit cards and improving your score. And those are details, obviously you can get in with your loan officer. But let's move on to the next one, right? Okay. A lot of times people think they need a huge down payment. I don't know if I really want to get into down payment assistance because that's a different type of program. They are available out there, but let's just talk about the regular loans, right? There's programs out there now that are designed to help first-time homebuyers. There's, obviously FHA 3.5% down. FHA is a great program for first-time homebuyers. Okay, and it may not necessarily be the right program for that client. I have first-time home buyers who are putting down more money, right? But if you're trying to do the minimum, it's a great program. And even if you have some credit issues out there, right?
I did actually come across recently to a client that he doesn't want to do the FHA because the mortgage insurance. He doesn't want to have
an insurance. Yeah. So, well, that being the case, there's a 3% down conventional loan, which I look at a lot of times too. There's always a trade-off, right? And that's where you got to have that conversation with your mortgage broker, loan officer, whoever, and also your agent. Do you want to put down just 3%, have, a lower MI, okay, and maybe just a little bit higher payment on a conventional loan, or do you want the lower interest rate, but you're going to be paying at 1.75% funding fee? So it all depends upon the client, I think, on which direction we want to go. But for first-time home buyers now, there's so many options that are out there for them, and that allows them to get into these programs pretty easy compared in the past. And if they don't, so a lot of people think they may not even qualify, and then you turn around, pull their credit, and you look at it, and they're highly qualified borrowers. So,
Yeah.
right?
So other question that I always have is, for example, when we were under contract,
Mm-hmm.
and then let's say the contract was writing on by the real estate agent saying that the client is the buyer is gonna make a 5% down payment.
Mm-hmm.
This is a question that I have very recent for one of my clients. And what about if at the end I decided to put less money, if I'm allowed, or I want to put more money instead of I decided to put 10,000. 10% down instead of the
Mm-hmm.
5% down. And I always say, I told him, well, whatever during the transaction, after the option period. The option period is when we're doing all the inspections. Definitely, you can talk to your lender and figure it out. Make numbers. I mean, you have typically 25 to 30 days to decide if you gonna be or if you want to be putting more down payment or not. If you have the possibility of do that or not. So that was, because they always ask me if I want to put less, but I never had the question, can I put more down payment?
I mean, yeah, I mean, we run across that every once in a while, right?
Yeah.
You have a client that's, I don't know if I want to put down 20%. I'm going to have moving expenses. I'm going to have to do this. Maybe I just want to put down 15%, whatever. And we'll write up the contract, right? You write up that contract where they're just maybe putting down 5%, and they get the quotes in for moving and setting up new furniture and everything else. They go, you know what? I want to put down another 10%. At that point, I don't think the seller cares. Nobody really cares. You just make a change to the contract. I think where you run into problems is, let's just say, for example, you write up a contract as conventional, and you get in there and something pops up and you no longer go conventional. You maybe have to switch to an FHA. Okay.
That's a good question. I always thought that, like I heard that it's better to be approved as a FHA and later on convert the loan as a conventional. That is a lot easier than doing the backwards conventional. Go to
You're 100% correct, because if you start out as an FHA, conventional will take that FHA appraisal, but FHA will not take a conventional appraisal. So you can go from one to the other. But once again, you might need to notify the listing agent, the selling agent, something like that. I think, let's just say, for example, you start out as an FHA and the property does not meet FHA guidelines for whatever reasons. Okay. And now you've got to switch it over to conventional. I think as long as the client qualifies for that, nobody's really going to care. It's just communication, right? Communication, right? Yeah. Tell your loan officer what your concerns are. Tell your real estate agent what your concerns are. We can't address those things if we don't know what they are, right? It may not necessarily kill your deal, and it may strengthen your deal. So let us know so we know what we're working with.
So. Yeah. So the conversation between the buyer and the lender is key of everything, even to the program. Even if you want to, before and after and during the transaction, even if you want to put more down payment or less down payment, the restructure of the loan can be, during a real estate contract, during the contract. Conversation is key. Those major purchases, I have the house, now I want to have the car or the truck or the Tahoe, whatever. That has to be a conversation with the lender. It's just like I always tell my client, it just treat it like you cannot make a decision, you cannot make a transaction, a purchase, nothing on your credit during the period that you are under contract. After closing and funding, that's another story. So I always say first the house and then the car. So that's always the key. The conversation again is key. With your lender. Hey, I've been thinking to do this. What do you think? You're probably going
Yeah.
to say, don't do it. But
So, yeah. So one of the questions, next question I was going to ask, and I'm going to kind of lead into this too after you answer it. What's one of the mistakes that you see that has cost thousands of dollars sometimes to clients?
what I see,
Yeah.
okay, kind of the same thing, like is the small. It's just funny though. It's small things like that. People withdrawing large or depositing large uh, money in cash without paper trail into
Mm-hmm.
a bank account, before closing, where, 5 days, 10 days after closing is when, your case is being magnified by the underwriter for the,
Right.
from the bank before you giving you the clear to close. So stuff like that, any movement on, on the credit card, on the scores, it just it's funny. Simple as I'm gonna say that because I did have that case years ago. Simple as a purchase from Victoria's Secret
Mm-hmm.
credit card. Stuff like that makes can impact your final approval. So
Right.
people don't realize that how important it is. Any the way sometimes that I wanted to explain is during the transaction, your FICO score, your credit, your financial is a snapshot of that moment.
Right.
If you move it for things that you can be for to trying to improve it, or a small purchase that you think that is not going to hurt you, don't do it, because
Yeah.
it won't impact the final approval.
Right. I think one of the things that I do, and I've done for a long time, that I do this with your clients. Okay. Especially you deal with a lot of Hispanic clients, right? So
Yes.
there sometimes there's a language barrier
Yeah.
simply by maybe not necessarily understanding the process. Correct. So one of the
Yeah.
things that I like to do, and this, and sometimes a lot of times we have to do it together on the phone, right? You have to translate for me.
Hmm.
But is to go over your if you've never closed a loan before, it is very important for the loan officer to do this. And your loan officer's not doing it, make them do it. Okay. And that is go over the loan estimate detail by detail by detail to understand exactly what your fees are, what you're paying for, and
Yeah.
understand what you have control over. There's some things that you don't have control over, right?
Yeah.
You don't have control over what the appraisal is going to cost. You don't have really any control over the title fees or anything like that, but you have control over the insurance. You have control over how you get your interest rate, whether you buy it down or not, and whether it's worth it, right?
So you just say something that I didn't know. I didn't know that you don't, when you request an appraisal, you don't have control of that. I didn't know. Um,
No, so nowadays, okay, is used to 10 plus years ago, right?
mhm.
God, and it's probably longer than that. That shows how old I'm getting. We just pick up the phone, we call an appraiser that we like to use, right? We had appraisers
I
in our
remember those
pocket,
days.
yeah, and they were great, right? But now everything has to go through an AMC. So unless it's a VA loan, everything goes through an appraisal management company. So the
Whoever is speaking that word.
whoever's
Okay,
picking
got
it
it.
up.
I understand
Yeah.
now.
And
Oh,
different appraisal management companies have different costs for certain locations and everything else. So yeah, they don't have a choice over that. That's one of the things that it is what it is.
okay.
So, but
So
I
I didn't know that it's not a set fee. It's not like, for example, a $500 or $600 or $800 fee for an appraisal. Is okay. It's like a pool
yeah,
of when you. Okay, got it. I
yeah,
didn't know that.
yeah. The only time it's set is on VA. So
Okay.
VA has a set fee. That's it. Everything else, I mean, if you're dealing with, say, a uh, property in McKinney, Texas, right, which you have more than enough appraisers in that area, it's going to be less to get an appraisal because the pool is so much bigger, right?
Yeah.
But if you're talking about, and I'm just throwing out numbers, say Stephenville, Texas, right, there may not be as many appraisers that do that area, so the cost of that appraisal is going to be higher. So that does factor into that. Okay. But
Gotcha.
but yeah, I've seen this too many times where clients they don't understand the fees, and that helps. And I'm gonna, since you do deal with certain or wide variety of clients, we've ran into this before too, which is never ever ever give your mortgage company money up front. It's against the law.
Yeah.
They cannot accept, now they can accept money for a credit report, if you need to hold an appraisal fee or something like that, but most of those are paid online as it is. And then of course they have to pay for the inspection or home inspection, that type of stuff, but you're not allowed to do that. They're not allowed to collect that. So if you've got somebody that is asking for hundreds or a couple $1,000s up front just to work on your loan, run,
Ron.
because that
But
is illegal.
yeah, have you heard stories about that lately?
I haven't
I
lately, but
haven't.
you and I had a couple of clients in the past
Yes,
that happened
yes,
to.
we have something that,
Yeah,
yeah, there's like Ron.
yeah,
That's
we had to step in
scary.
and help them
Yeah,
out. And
yeah,
the sad part is it is usually people that don't necessarily qualify,
yeah.
or there's going to be a harder loan, and I just hate to see that happen to people.
So I'm reading here what one of your questions is say, what is something the most first time buyers don't even realize they should be doing before start looking for a house?
Right.
Yeah.
Yeah.
It's just sitting down. It's just always been sitting down with, with the lender, with the,
Yeah.
with the mortgage company. Um, Stuff that I always come across is, what about the banks? What
Mhm.
about, I've been with my bank for years. Can I get a loan through them? And what do you? I can tell you later what is my question and
Yeah.
answer to that. But I want you to, I want you to answer for me.
Yeah, I mean, here's the thing. Banks are great at doing bank stuff, which, is checking accounts, money markets, that kind of stuff, right? But I don't think they're equipped in a lot of situations to handle the type of flow that a lot of people see when it comes to mortgage lending. Okay.
Yeah,
For example, every lender is out there that is different. Now we all have a lot of the same guidelines, but there's overlays, there's staff, there's processes. So, for example, FHA. Okay,
hmm,
you an FHA loan is offered by just about every lender out there. All right, if they're on the conventional side, but some may stop at a 640 FICO. Some may go down to a 620 FICO. I've got lenders out there that'll go down to a 500 FICO on an FHA loan, a manual underwrite. But if you don't know where to go to, then you may be having your credit pulled over and over again. And then you're talking about turn times. There's lenders out there that, and there's banks are probably some of the worst at it,
yeah,
that they're going 30 plus days on underwriting. Your file's getting turned over to a processor. You're just another person on the line. Whereas, like for example, with my FHA, VA, conventional, those loans are in and out of underwriting generally within 3 to 12
but
hours.
I think it's a myth for people that brokers have higher fees than a big bank, for example.
No, you're absolutely right, because it's retail as opposed to
Yeah,
wholesale for technical terms, right? It's pretty much the same rates. It's just we get paid to sell the loan to the lender, as opposed to them having to pay staff and pay office space and everything else. So we're offering, and a lot of times, better rates.
yeah,
And if not, they're at least comparable. What you're going to find, though, is the customer service. You're not going to be able to call a bank at 8 o'clock on a Sunday night and ask a question, whereas my phone's on 24/7. And if I'm halfway across the world on vacation, I'm still going to pick up the phone.
yeah,
So it all comes down to managing clients, right, and the expectations.
yeah. And yeah, I always, your answer is basically similar to mine, to my clients, when
Mhm.
they say, what about if I go to my bank, whatever it is that I'm been doing business with them. I have been having my bank accounts with them for 20 years. And this is the answer that I say. Well, it's a myth about the rates. Rates, any lender, they don't control. A bank that doesn't control the rates. A mortgage company doesn't control the rate. It just basically is a reflection of your FICO score. Number one,
Right.
Your credit history. Number two, the customer service that you will get through a mortgage broker or independent lender is not the same thing that you're gonna get from a huge bank. Like it's not. It's not. Banks have maybe in a pipeline over 100 clients. A lender or independent broker have maybe 20. So it's a big, huge difference in about the customer service.
Right.
And you're a number, that's, I'm sorry, but this is always what I tell my clients, and I've been doing this for this year's 11 years, and I never have closed on time with a big bank name, never.
Right.
So yeah, that means money that my client, it could be losing if we don't close on time.
And let's throw it back on the realtor too, right? You have a lot of people that want to do, private sales, right? They want to bypass using a realtor on something. And, if you're in a situation where it's your first time to buy a house, or even if it's the second or third, there's things that you don't know, right? And that's where we come in, correct? That's why we may be answering the phone at 8 o'clock on a Sunday night because something popped up. But, we manage a smaller pool of people, whereas if you go to a bank, right, you're just a number. You might have been doing business with that bank for 25 years or since you were 16 years old, right? But to them, to that hourly rated processor that's
Monday to
working
Friday
there,
to 5 o'clock, and after 5 o'clock,
yeah,
you're not gonna get nobody else to answer the phone.
no, and people want to go and they want to do for sale by owner type contracts and that type of stuff, and they don't know the questions, right? When you walk into a house with a client, they may fall in love with it, and you're sitting there looking at a leak that's in the wall that they've never even seen before, correct?
I remember, and that's something that you say your eye is already trained. And then of course with the thousands of inspections that I trying to go to all my inspections. And I've been learning a lot of stuff from the inspectors, right? So anyways, yeah, it's funny. I remember a case in particular that my client fell in love with a property, and I say, okay, but I think this house, I mean, something about it. It's just, I don't know what it is. I'm not a foundation company. I'm not an inspector, but it's something about this house that is telling me there is major foundation, even though that they say the repair is major foundation issues on this property. But if we will approach it, we will address it when we get on the contract. And to be honest with you, instead of, and I remember that I told the client, saying, to be honest with you, I will right away, instead of do a full inspection of the property, I will highly recommend you to hire a foundation company and do their diligences, or which sometimes more a structural engineer. And we ended hiring a structural engineer for that property.
Right.
It cost, I remember, like $600.
But
I think, and I was right. I was like, and I was like, listen, the client have to finally walk away for the house, but it was major issues with the house.
Yeah. And that goes back to communication, right? Whether you're, I run into those situations too, where every once in a while, I've got one right now. It's a VA loan, and the house is a little bit smaller. It's on some acreage. It has a rainwater collection system on it, right? And which is unusual for this area, right? But I did the best due diligence I could on it. It's in underwriting right now, but the client knows, the real estate agent knows The seller knows that, number one, we had to have a well put in, which the seller's willing to do,
Okay.
but it's going to have to comp out. I mean, it's a little bit of an unusually smaller house for the area, but their biggest risk, credit and everything's taken care of, but their biggest risk is the appraisal. But the client knows that. They go into it eyes wide open, correct? The
Yeah.
same thing as what you did with your client. Okay, we may have some foundation issues here, but if you love this house and this is where you are and you want to buy it and you're willing to pay for it or have the
Or
seller
negotiate
pay
it,
for
but
it.
that,
Yeah,
but yeah,
but no, yeah,
exactly. You need to know up front why you buying.
yeah,
That's all.
exactly. So communication, right?
Yeah.
So I'm going to put your little advertisement up here so people can sign up for the class if they want to. And
Thank you.
I'm going to ask, this is going to go out to Facebook, several other places. If you know somebody that's wanting to buy, send it to them, share it to them, and have them pop in. And obviously, Millie and I are always available for questions. If you have some outside this class, you just want to pick up the phone and call, give us a call. Okay.
Yeah.
But Millie, anything else you want to say before we close up today?
I just wanna this, the QR code, it works, so you can register to the webinar that we're gonna have on Thursday 19 at 7 o'clock p.m. And once again, this is like a series of webinars that we're gonna start doing every 2 weeks. And we're gonna be talking about Millie and I is my colleague from Century 21. We're going to be talking about, real estate, basically.
All right. Well, it's always great talking to you. You and I've been friends for years now, right? And
Yeah.
You might like me now. I'm not sure, but
A little.
Not a little. Well, you have a great day, and we'll see you at the class tomorrow night. Okay.
All right. Thank you so much.
Talk
And
to
I
you
love
later.
your background. Better
Thank
than
you.
mine. We need Jesus. I need to keep up.
I know.
All right.
Talk to you
Bye,
later.
Scott.
Thanks.
Thank you.
Bye. Bye-bye.
Bye.